What's going on YouTube? Mark Fleetwood here. Welcome back to the Daily Grind Trader. Today I'm starting my ICT concepts lessons, and I want to make one thing perfectly clear from the jump. I do not take credit for this. ICT himself, the Inner Circle Trader, you can check out his YouTube channel. His name is Michael J. Huddleston. Has all of his concepts, hundreds and hundreds of hours of content if you choose to really do a deep dive into it. What I'm trying to do is break it down into smaller sub-content and maybe present it in a way that's a little bit different, because I know some people retain or gain information differently than others. So if I can help one other person understand ICT concepts that maybe weren't quite understanding from his way of explaining it, then I felt like I've done a service. But in no way, shape, or form am I trying to take any credit for this, and I'm not trying to just gain off of his material. It's so much so that I want to help spread it and maybe help someone else understand it. So the first thing we're going to talk about is daily bias. There's a lot of people who make videos and talk about how you can use ICT concepts without using daily bias. And at that point, my belief is that you're not really using ICT anymore. You're using his entry models, and you are essentially using patterns and retail trading a pattern, because you're not using the primary reason why ICT concepts are so good, and that is having a bias, a daily bias, and a narrative to understand where the market is going to go next. So I want to see if I can do something real quick, because I want to show you this in real time. I'll make a phone call real quick and see if I can get this, just so you know it's completely random. All right, so we're just go to Google and just do a random number generator. So 1 through 10, all right, 3, so that'd be March. 1 through 30, March 16th. We're gonna go to March 16th, and we're gonna start looking at daily bias and see what we can discover. We'll go to replay mode. Using this in a little bit. Okay, so we're coming out of a bearish trend. I'm sorry, I was kind of a little discombobulated on this replay mode, but coming down, making lower highs, lower lows, lower high, lower low. We made a high, a low, and now we made a higher high. So we actually had a interim low high here, a low, a high. So we're starting to flip the trend here. You can see the trend is starting to flip. And this was the beginning of 23, so we know the kind of markets kind of ran up a little bit. So what I'm looking for is I'm looking for a bias. So long-term bias, we're looking bullish, and it looks like we have taken out liquidity here. We took out liquidity. We had this low and this equal low, and we took liquidity out and we pushed off. So I'm thinking that we could get I think we can get a solid push to the upside. I think we can continue this push up, and we can start targeting this candle here, this candle top, and eventually target these relatively equal highs here to put in a new high. So my daily bias right now, even though this was Tuesday, March 14th, going into March 15th, we had a large buy candle up. I think our daily bias is still to go strong, and is still to take out the high of this candle. So my daily bias right now is to go long. So I'm going to play 1 day. Okay, we wicked down really low, but we did take out that high, and that would be that Judas swing, and that's part of the ICT concept that you hear about, is taking the swing low on a bullish. So you're looking to get in on the lowest point to go long, and you want to go short on the highest point. So if we were to take a Fibonacci from the top and bottom of this candle this previous day, you got almost a 79% retracement, almost to the 786 or whatever. You got that much of a retracement before closing high. So that is one of the best discounts you can get into. So we closed above, we broke it and we closed above. So my daily bias is to continue to go long. So let's see here, we get one more day. Okay, we go along again. We broke this swing point. This is a swing point because we have a high, a higher high, and then a lower high. This was our swing point here. It was an intermediate term swing point. So now we broke that high and we closed above that previous high, and we closed with bullish momentum, and we closed above the swing high. I think we break this high again. Let's see if we attack that high again. Okay, we attacked the high, but we didn't close above it. Now we closed below it. Now my daily bias is going to be to come down and see if we attack this low. Now, I wouldn't immediately switch from one daily candle, but my bias right now is to say we might swing by, test its low, and that also puts us into a position where we have created a fair value gap. Now, this fair value gap is going to want to get filled. It may not get filled right away, but the fair value gap will want to get filled. And let's see what it does. The fair value gap gets filled. Price still can't break the upper or the lower, not close. So right now I don't have much of a bias, but that fair value gap did get hit. And of course now I can't find, okay, there's my line. So what I'm gonna do is I'm gonna leave that, but I still think, because we didn't even reach for the top, I think now we do. Because we reached for the bottom, we failed. We closed back up near the open. Now I think we're going to reach for the top. Okay, there we go. So again, look, you reach for the high, you close above the high. You reach for the high and you can't. The next thing that's going to happen is to reach for the low. You reach for that low, you can't close above it. You reach for the high again. Now we got that high, we reached above it. Now I think we're going to push up and try to break these relatively equal highs and take liquidity. And that is a liquidity sweep there. Look, price wicked up all the way, took out the high of the entire range, took out the full high. I was looking at these like relatively equal highs, but it took out everything and closed back down with a strong candle down. So now I expect to reach for this low again. It did not. It actually formed an inside candle, which right now gives me very little bias at all. That, in fact, it was an inside candle. It did not reach for the high or the low. It might consolidate here for a while. So we're in consolidation. I want to see a break one way or the other. I don't have a bias right now. Still another inside candle. Reach for the top. Failed. Closed lower. Now I go back to having a bias, a downward bias. See if we reach below this low again. We reached below, we did close below it, but just slightly. We might reach for another low. And we might reach to get deeper and completely fill the rest of this fair value gap. So I'm gonna mark this out because it got wicked into, but it didn't really get fully closed. So we might come all the way down into there. So I think we go down again. No, we reached for the top. We closed above the top. So now that day, that was a day my bias was wrong. But now the bias is to say we're going to break through this top and we're going to actually shift market structure with the close above this top. Let's see if we get it. Okay, we closed above. Let's see if we get another close above. Now we have broken market structure. So we get another close above. Do we break it and continue forward? We do not. We get an inside candle, and this inside candle could be a continuation. It could be starting a change of character, but as of right now, it leaves you with almost no bias. And it's a Monday, so it's a Monday inside candle. So again, you have that big gap down from the weekend. That's why you open here instead of up here, because you had a weekend gap. So let's play it out one more time. Attacked the high, closed lower. I still don't like a bias here. I think we might go lower and close this fair value gap here. I think we might close this gap. So I'm gonna say we have a bias to go lower. And then we fill that gap. Now we've tested this as a level of support and the fair value gap. Now that's a point of interest. This is an area where you would want to dig in to your charts, dig in to the short time frames, the 15 minutes, the 5 minutes. Now you want to look for the change of character. And it would have been here. It would have been at any of these points. You know, you broke down, you took liquidity out of this low. Now you look for the short time frame, change of character, and you ride this up. You came down, you cracked into that fair value gap. Now you look to ride it up. You know, when you get those points of interest, that's why the daily bias is so important, because in the middle of these zones, you don't really know. It went up, it faked up, it went down, it went up, it went down. Your point of interest in daily bias is going to be the most important things for ICT before you look at any entry models. Learn how to do this. Learn how to identify where you believe price is going to go next. We hit our point. We hit this point of interest. I don't know if we go for the high, but I do see that there's going to be probably a wick down and then a push to the upside. Let's see what happens. And look, I swear, this is completely random. I'm not doing something I've previously looked at. So now we're going to see if we didn't get, we got the bottom. We didn't get the top. So I think we start pushing up towards the top. Okay, do we close above? We did not close above. This is technically kind of an inside candle, so I'm going to say we still push up. We pushed up, we got the top, bottom, and man, that's a hell of a candle. And this is when I went on a Monday. Okay, so Monday really went wild here. So I don't have a bias here. This is a little bit of an odd combo here. Let's see what happens next. Push down. Okay, we pushed down. We took the high. We took the high of that candle. We pushed down. We didn't take the low, so we'll probably go towards the low again. And we pushed, took the top again, and took the low, and we closed below. So I think we go low again here. We took the low and pushed back up. Again, remember, look, our bias overall is still bullish. So now we might push up and we're going to test for this high, I think. I think now we test to see if we can get this full high. We keep fighting that fair value gap, and then we come down and get into this one. Okay. Now we close that fair value gap, and you know, there's just things that you miss and I missed. This swing low to that swing high point. When do we get into a point of discount to start going for longs? All right, now we swung through that point of discount. So let's see what we get here for the daily bias. I would start looking for longs here. There you go. And see if we break through that. We take this high again. Let's see if we can take this high. Don't quite take it. We wick above it. We don't get it. There's going to be start making a move back down. Making a move back down. So this created like that, almost like a double top scenario where we might see some price range back down. All right, we keep closing below and taking the lows, not taking the highs. So we are, and then there we go. Wow. So tapped right back through. You can see where these areas of interest kind of hold their power of areas of interest. So we push high, we've got this. What is either going to be a liquidity grab or a draw on liquidity to push up. And it's just a grab. We're going to come, oh nope, there it goes. So there is the displacement to the upside. So in this range, from where we started, starting to 115. So we came down, retraced, had our displacement to the upside, had our expansion up, had our consolidation, and then an expansion up. Now, if you can find out what market you're in, are you in an expanding market, in a range market, in a consolidation market? If you can identify that on the daily time frame, your shorts, your longs, your scalps will be that much better, will be that much more easy to identify, and your win rate will go through the roof. That's why daily bias is so important. And there are way too many people who think that they can teach you how to trade without daily bias, and it's not going to be ICT. It's just not going to be it. I hope you enjoyed this video, guys. A little bit longer than I wanted, but it needs to be said. It needs to be done. As always, until next time, peace.